Hello, welcome to the European Open briefing for Tuesday, June the 27th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing the slightly firmer dollar, at least at the start of Asian trading, although the dollar yen has fallen a little bit at the start of European trading. The focus is on the speech later in the day by Fed Chair Janet Yellen, where investors are betting that Yellen will reiterate the need for a third rate hike this year. We are seeing overall improved risk sentiment that's helping risk currencies such as the Australian and New Zealand dollars. The pound is also firmer following that deal between the Conservatives and the DUP party, where the DUP will support the Conservatives' minority government. And we're seeing gold up this morning, despite the fact that we do have risk sentiment, and that's mainly due to the fact that gold fell rather abruptly yesterday, which, according to market reports, was due to a large sell order that was done in error. But let's begin now with the dollar and the yen. We can see here the dollar actually rose to a 1 month high, briefly topping 112 level. It's fallen, it's dropped back from those highs. At the moment, it's currently trading around 111.60. Much of the focus today will be on Fed Chair Janet Yellen. She's due to speak in London. She's going to be participating in a conversation about global economic issues at the British Academy, where the expectations are that she will probably once again say that US rates are likely to go up one more time this year, and that would probably boost the dollar, given the fact that the dollar has been lacking direction in recent weeks. We did have durable goods data yesterday out of the US, which was actually weaker than expected. Durable goods orders fell 1.1% in May month-on-month versus forecast of just 0.6% drop. There's going to be more important data later in the week, particularly the personal consumption and PCE price index. Let's move on to go to gold now, because we did have a rather steep fall yesterday that was likely caused by human error, and due to low liquidity we saw rather high volatility. The gold actually fell further after that sell order, although it was reported that the person that did the sell order placed the buy order reverse soon afterwards. This morning we're seeing gold bounce back about $1,250 an ounce, although it's unlikely whether or not it's going to rise further, given the fact that we do have strong risks appetite this morning. The yen was also weaker against most major currencies late yesterday evening and at the start of Asian trading today, although the yen has come off those lows in around the European Open. Moving on to the euro and the pound, the euro failed to hold above the 1.12 level. It did come a little bit under pressure yesterday after ECB President Mario Draghi. He basically defended the central bank's ultra-loose monetary policy. He said that this is helping to create jobs and foster growth in the Eurozone, as well as it's ultimately reducing inequality, and adding that withdrawing monetary stimulus too soon would could lead to a fresh recession, and it would increase inequality. The euro did touch a low of around 1.1172. It did briefly rise above 1.12 early this morning, though it's currently trading around 1.1190. Looking at the pound got a small boost yesterday from that deal finally being signed between the Conservatives and the Democratic Unionist Party in Northern Ireland, where the DUP will be voting together with the Conservatives on key issues such as the budget and Brexit. So that means that all the Brexit bills are likely to pass in Parliament. The agreement is also only just for 2 years, meaning that we don't have a guarantee that Theresa May will stay as Prime Minister, or even the fact that that we won't have a general election for the full 5-year term. So for now, though, the pound is seeing at least a bit more certainty. That's helping the pound to hold above the 1.27 level. And the risk sentiment, we're seeing the improved risk sentiment this morning is helping particularly the Australian and New Zealand dollars. The Aussie hit a 1-week high of 0.7613. It's eyeing the June's 10-week peak around about mid-June. The Kiwi also is up. It's at a 2-week high of 0.7313 against the US dollar. That's very close to the 4 months high touched early in the month. We did have New Zealand trade data out this morning where we saw the deficit increase in May, though that didn't really impact too much the Kiwi. And as I said, we're seeing good risk appetite. The CBOE volatility index, which is a closely watched measure of market volatility, has fallen back towards two-decade lows, and we're seeing strong equity rallies around the globe. So for now, the Aussie and the Kiwi appear to be benefiting from that, despite the fact that commodity prices aren't doing too well. Looking at today's economic calendar, the main data out later in the day will be the Consumer Confidence Index out of the US, as well as the Case-Shiller 20 City House Price Index. We're going to have speeches by Mario Draghi once again. He's attending an ECB forum in Portugal. He's due to speak at 0800 GMT. Bank of England Governor Mark Carney will speak on financial stability. The bank will publish its financial stability report. He's unlikely to mention monetary policy. He's going to speak at 10 GMT. And of course, Fed Chair Janet Yellen, she'll be speaking at 17 hours GMT. That's it from me. Thank you very much for watching, and have a great day.